Hey, I'm Ethan. I'll be starting off our presentation on the Federal Reserve, but before we get into that, I'm going to take you all through our Oanda practice trading. Here's our activity log of all the trades we did. As you can see, we ended up getting pretty lucky early on with reaching our profit goal on October 4th. And we thought about continuing to trade a bit, but decided to quit while we were still ahead. We really only had 7 serious trades, but if you count the little one at the 5th ticket spot, and this quick one we opened and closed at ticket number 10, we had a total of 9 trades. The 6th ticket was just us testing out the buy order feature, and that trade never actually really went through. But I'll go over the trades in the order we bought them, and if you check the dates over on the far right, you can see that the first 5 were all bought on the same day. We doubled down against the Japanese yen about 6 days later, but ended up closing everything on October 3rd, as we hadn't seen much growth and had plans to step up our strategy. The first chart we'll look at is the US dollar against the South African rand. And the blue triangle is where we got in, and the orange one is where we got out. Our decision to do this trade was based solely on the upward trend of the pair. Honestly, that would be a similar story for the rest of the trades we did on this day, as we hadn't learned much yet about other indicators at this point. And if you look over to the left here, you can see we went in for about 3,000 US dollars when the ZAR was valued at 17.78 ZARs to the dollar. And we held for 12 days and sold at 18 ZARs to the dollar for a net profit of $35.85. And it ended up being a good time to get out, as over the following 2 days, both the ZAR and the Singapore dollar down at the bottom strengthened relative to the US dollar, back to about where they were when we bet against them. Both of these trades worked out for us, each netting us roughly a 1% return. This chart on the top here is the US dollar against the Swedish krona. If you look 2 candlesticks to the right of where we got in, you'll see that there was a short spurt of volatility on that day, where the SEK strengthened rapidly against the dollar, only to weaken as it had been doing over the last couple weeks. And we really should have taken this as a sign that the SEK may go for a stronger run, as it did over the next week or so, but we didn't see that until it was too late. Fortunately, we were not in very heavily, as we were still careful while we learned about trading and only faced a $10 loss. The chart on the bottom there is the US dollar against the Canadian dollar. If you're wondering why there are 2 stat boxes, it's because this was the very first trade we did, and right after that we decided that we wanted to put 3,000 US dollars in for most of these starting prices. And this one actually ended up going pretty well, as you can see. We got in while the trend was our friend and got out at a pretty good time, just as things were making a downturn. And we wanted to do one bigger trade on this first day just to test things out, and settled on the US dollar against the Japanese yen. We had pretty bad timing on this one, as it tanked heavily the same day we bought it. But fortunately it recovered, but ended up staying pretty stable for the next week or so after that. And we went big on this one because of the 3 previous good days, and we're hopeful that the US dollar was going to go for another run like it had earlier in late August. But no harm done besides wasted time, as we still ended up with a $25 profit. We decided to trade the Canadian dollar against the Japanese yen about 6 days after the ones we previously covered. At this point, we had learned a bit more about some indicators other than ranging and trending. We looked around a bit for this trade actually, as we wanted to find something that was below the 50-day simple moving average that we thought may make a run back up. I know we were warned not to try to catch the start of a trend, but we couldn't help ourselves on this one, and we're prepared to take a bit more risk, as we were still nowhere near our $2,000 profit mark. We saw the trend was turning around, jumped in, but as you can see, it wasn't quite time yet, as the growth petered out just short of the 50-day simple moving average and turned back around. And even though we sold the trade for a small loss when it was on its way back to crossing the 50-day average, it was okay, because we'd spotted a new pair that we knew we would need all of our capital for. Of course, the run we hoped would happen when we bought the pair happened after we sold, but it was all right because it was short-lived and we were investing elsewhere. Betting the Swiss franc against the Hong Kong dollar was our big money maker that secured us our $2,000 profit goal. We're looking at a big timeline here to help describe what we were looking at and thinking for this one. We liked the trade because the 50-day simple moving average was below the 200-day, and the exchange rate was volatile with numerous signs of crossing well above the 50-day average. It even had some runs at the 200-day, but the Swiss franc couldn't quite hold on after it passed that threshold. We realized that if we took out a large margin on this trade, it wouldn't have to rise all that far for us to make our $2,000 profit goal. And in June, July, August, and September, there were heavy downfalls followed by strong rises the next day. We figured if we could time this one right, we would have a decent chance of making our profit goal, so long as we could hold on long enough and not sell too early if things started looking bad. But I'll switch to the 4-hour chart of the month leading up to the purchase to get a closer look. One thing I want to point out here is the green and red dotted lines. Given that we were taking out such a heavy margin and the stock was so volatile, we wanted to cover our losses. We put a stop loss in at 7.8 that definitely would have hurt had the pair tanked that far, but not crippled us. We wanted to put our loss line below where the pair had bounced back twice from in the previous week, but high enough so that we could get out in case of a volatile turn for the worse. For our take profit line, we had established beforehand that 7.98 would be a good number, as the rate had crossed that threshold about a dozen times in the last 10 days in separate 4-hour candlesticks. The only thing left was to calculate how much we had to invest to reach our profit goal after accounting for our previous trades. And after we had all that figured out, we invested in 800,000 units of Swiss franc against the Hong Kong dollar and hoped for the best. As you can see, the next 16 hours were tough as the rate made a run towards our stop loss line. But we knew this was a volatile pair and hoped it would turn back around in the same spot it had the week before and make another strong upward run. And sure enough, 31 hours after we made the trade, it surpassed our 7.98 take profit number, and we got out of there with a $2,540 gain. We ended up taking out 8 times leverage on this one, and that boosted our returns enough to meet the goal. I just wanted to note the Swiss franc trades almost 1-to-1 with the US dollar, but we couldn't trade the US dollar against the Hong Kong dollar because of how they're pegged, and we debated doing a similar trade between the US dollar and the Swiss franc just because of the volatility, but went to bet against the Hong Kong dollar because we just thought the chart looked a bit better and easier to read. And this is just our final slide summing up everything. A final balance of $102,657. And we must have gotten $5 interest from holding something, but I couldn't find out which one it was from. But thanks for listening. I hope you enjoy the rest of the presentation on the Federal Reserve.